Hello, everyone. Good morning, good afternoon, and good evening to you all, depending on whichever part of the world you are tuning in from. I'm always excited as always to welcome you to another promising edition on the Forex Morning Mastery. Welcome to our final Forex Morning Mastery session of the week. Today is the last trading day, and as we all know, market participants will be wrapping up their positions ahead of the weekend. And we've been keeping a close eye on the weak US dollar, and as expected, the sentiment is leaning towards a rate cut as always, as we have projected in the last couple of weeks, allowing us to capitalize on the opportunities it presented through the course of the week. So we are going to be taking a deep dive into the market dynamics today and looking at how we have maximized the potential of every opportunities we took, and of course using that historical data to prepare ourselves for the last trading day of the week. And as a quick reminder, we are starting earlier than usual because I will be taking my daughter to a tournament later today. But I knew it was important for us to come together this morning and prepare for today's trading session. Today is very key, not just because it's the last trading day of the week, but because the market can show unexpected move that could lead to high volatilities as traders adjust their portfolio and lock in profits ahead of the weekend. So we always want to be ready, navigate through these final opportunities and moments, and ensure we end the week on a strong note. So in preparation for today, I do have very insightful and simple trading setups that we are going to be using to navigate. So I encourage us all to stay tuned in and ensure you don't miss out on any of these ideas. For those of you who will be maybe joining us for the first time today, you are highly welcome on board. Very excited to have you around with us. And to quickly intimate you with what this is all about, the Forex Morning Mastery is an avenue, an educational avenue where we come together 3 times in a week to do follow-up details on the assets I share during the weekend. So during the Forex Morning Mastery, we come here Mondays, Wednesdays, and Friday, coming together to have a deep understanding into what the market participants are doing by looking at the market through the lens of price action and fundamental analysis. So I'm highly glad to have you around with us this morning, and I do encourage us all to engage in the comment section. So with that being said, let's dive into the market, and as usual, the first thing we normally do every morning before we go into the fundamental and technical details is for us to keep tabs with the fundamental factors that are likely going to be influencing the sentiment in the market today. And of course, we are going to be taking a look into what has really happened as regards to the fundamental aspect of the market through the course of the week before delving into the details. Now, by checking the economic calendar, we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and, most importantly, timing to ensure that we be on standby to capitalize on whatever opportunity the market presents prior, during, and even after this economic event. Now, based on the asset we are monitoring so far this week, for those of you who are new, we have been monitoring 3 financial instruments, which includes the USOILSPOT, the GBPUSD, and of course the XAUUSD, popularly known as the gold spot. And based on this asset we are looking at, we have been focusing on economic features from both the United States and the United Kingdom economic docket. Though we usually favor high impactful events, except for cases where there are no high impactful event, then we could take a look at mid-tier economic features. But this week has really been driven by high impactful event from both economies. Now, as you will see here, on Tuesday, September 10th, we had three impactful events from the United Kingdom, all of which were labor-oriented data. Now, from the claimant count change, employment change, and high and low unemployment rate, it really showed that the UK's labor sector was not doing bad at all, and this further helps the British pound to capitalize on the weaker US dollar. Then on Wednesday, September 11th, we had a couple of high impactful events from the United States, one of which was the presidential debate between the former president Donald Trump and the vice president Kamala Harris, where, of course, we saw majority of market analysts did projected that Harry came on top in that event actually, and it also had its own influence in the market. And then on that same day, we had the consumer price index. We all know this is an inflationary data, which obviously measures the average change in prices of goods and services over the last 30 days, indicating the inflation levels in the United States. And we did talk about how a higher CPI usually signals rising inflation, which may lead to the Fed probably maintaining interest rate. But the last couple of weeks, we talked about how the U.S. economies, the data coming out of the U.S. economy hasn't been very impressive at all, showing us signs that inflation has been dropping, and this has led to an increased sentiment in favor of a rate cut by the Federal Reserve, which is coming up next week. And this was further supported by dovish remark from the Fed chairman during his Jackson Hole Symposium speech, where he further emphasized that inflation is thinning out. However, the magnitude of the rate cut is what they were not sure of, and they needed some more data to decide if it's going to be a 25 basis or 50 basis point cut later this month. And from all ramifications, as you will see here, the consumer price index came in, dropped below what market had expected at 2.5%, giving us a deviation of negative 1.25. And this further is supporting the sentiment that there will be a rate cut next month. And now, according to the CME Watch tool, the percentage for 25 basis points cut has gone through the roof right now. I think it's around between 90% thereabout, where the possibility of a 50 basis point cut is currently pegged at around 37%. So there is a high chance that we have a rate cut this month rather, and the magnitude is pegged based on the sentiment right now at 25 basis point cut. Then on Thursday, we also had another inflationary data from the United States in the form of the producer price index, another data that measures the average change in prices that producers receive for their goods and services in the last 30 days. And if you look at what we have here, you saw what came in. We had a 2.4%, lower than the market had expected, but still at the same level with the previous month. So everything is leaning towards an interest rate cut next week. So, and of course, when there is the expectation of interest rate cut, what happens? The currency, we're talking about the currency of that particular economy, is expected to be devalued due to this. And we've seen through the course of the week how the US dollar dropped significantly. Now, today, Friday, September 13, will this momentum continue into the weekend, or are we likely going to be seeing some profit taking activities today, which could give the US dollar some certain level of recovery as market participants round off their trading activity ahead of the weekend? Now, to help market participants navigate today's market dynamics, they will be looking forward to another high impactful event from the United States in the form of the publication from the University of Michigan, that is the Consumer Sentiment Index. Now, for those of us who do not really know what this index is all about, well, to simply put, the data here measures how optimistic or pessimistic consumers feel about the US economy's future. Now, a higher index indicates confidence, suggesting stronger spending and economic growth, which can boost the US dollar immensely. On the other hand, a lower index shows consumers' concerns about the economy, potentially signaling weaker growth and leading to a weaker US dollar. Now, if we look at the previous month, it was pegged at 67.9, and economists and market participants, based on the current situation, are projecting that the data will come in a little bit higher than the previous month at 68. Now, we are going to be looking forward to what the actual data is going to be. Will it be just as expected, higher than expected, or even below market expectation, which definitely will influence the sentiment in the market today? And what time is this event coming up? That's 2 p.m. 2 p.m. UTC, and that's about 3 p.m. West African time. So I would encourage us all to mark out this timing, coming up in about 6 to 7 hours from now. And of course, we do understand that the anticipation of this event has its own way of influencing how market participants will behave, which obviously will reflect on the chart as price action. Now, with that said, now we shall be diving right into the chart. Let's look at things from a technical standpoint. Let's try to understand how market participants are anticipating this event, and this will give us some clues in the form of patterns and structures we can use to strategically position ourselves for the next move. So the first asset we usually take on, as always, will be the USOILSPOT. And so far this week, the USOILSPOT are done tremendously well for us all. Remember, we had a choppy start to the week where we were looking at the possibilities of a bullish momentum before that bearish signal came in on Tuesday. Of course, we were able to capitalize on that one before we started seeing another traction that pushed price into the $69.50 level. Now, for educational purposes and for those of us who missed out on our first edition for this week, I will quickly run through what things really looked like at the beginning of the week and what led to the decisions we made. So right here on the 1 hour time frame, now before I go in, we did a top-down analysis on this asset on Monday, and we went into the daily 4 hours time frame where we were able to identify the key level that we will be monitoring for this week, identifying the major trend and of course structural patterns that we are going to be using to navigate this dynamic. So I will not be going into that detail right now due to the limited time I have, but I encourage you to look at my Monday session for a detailed breakdown of this background if you missed out on that session. So we will only be focusing on the 1 hour time frame, which is our execution time frame. Now right here on the 1 hour time frame, as you will see, we had our key level, which is right here at the $67.50 area. And for those of you who have been with me for a while now, you know how we treat our key level. It serves as a significant yardstick guiding our trading activity for that particular week. And when price trades above our key level, we do look out for patterns and structures that support the idea of buying. And not unless this key level is broken to the downside can we start considering selling. Now, if you look at what happened during the first 24 hours of the week, it was more of a range bound structure. As you will see here, price was initially confined within the $68.75 level and the $68 area, emphasizing the level of indecision around that particular area. And you all know how we treat our range bound structure. Whenever we identify them, we do exercise patience, waiting for price to either break out of the resistance line to give us an opportunity to buy, or break down the support line to give us an opportunity to sell. And of course, we initially had price break out of the resistance line multiple times, as you will see here, but that buy position did not hold at all as we got stopped out in a loss on that one. Then on Tuesday, with a sell stop order below the $67.50 area, we had a strong bearish move, as you will see, with that engulfing bearish candle taking us down into the $65.40 area, and that dovetailed to I think about 200 pips thereabout before the bullish momentum came in. And I do remember giving us an update that we should move all stop losses accordingly, securing some profit. And if you had done that, you must have been taken out with a significant amount of profit on that one. Now, during my update on Wednesday, I did confirm to us that all sell positions have been closed as we saw price come back into the entry point here. And I did mention in my commentary that we will be looking out for buying opportunities above the $68 area. And as you will see, price climbed back above the 68. We had a couple of buy positions in that regard. Look at the first one here, had the $68 area. We had this bullish move, and then we saw price climb up, breaking out of the $68.75 again. Now at this point, we should be having a minimum of two buy positions right now, dovetailing to, I'm not sure why my screen is okay, so I think I should be able to bring that up. So let's look at how many pips this is. So we have the first one running with about 130 pips, while the second one is running with about 60 pips thereabout. So we have roughly over approximately 200 pips in profit at this point. So it is high time we moved all our stop losses. Let's secure this position, as anything could happen today, considering the fact that we are on the final trading day of the week. We could see some profit taking activities pushing price to the downside. So if you would ask me, I will suggest that anywhere around the $69 area seems most appropriate to move all stop losses to, giving enough breathing space for price action to move around. Now, with a well secured position at this juncture, what is going to be our plans for today? What are the chances that buyers will continue to push price higher, or are there any possibilities that sellers could come into play today, bringing price to the downside? Now, before we can actually dissect the structure, it's important for us to understand the fundamental factors that is driving the market behind the scenes. And in fact, we have various of them. We talked about this on Monday, one of which was the Hurricane Francine, which is disrupting the US oil output at this moment, and the storm forced producers to evacuate their platforms in the US Gulf of Mexico, resulting in significant output disruptions that have supported oil prices in the last couple of days. And I strongly believe that this is one of the major concerns of buyers of the US oil, as this situation here caused some panic, leading into increased demand in the oil commodity, leading to higher prices that we are seeing right now. Then another factor that is influencing this is the sentiment around market analysts predicting a decrease in oil production for the month of September, with estimates ranging from 50,000 to 60,000 barrels per day drop, keeping supply constrained at this point in time. So these two factors for me is one of the major reasons we are seeing oil prices rising. Then another factor we cannot ignore is the weak US dollar demand. And as we all know, concerns about weaker than expected demand in the US reflected in multi-year lows for gasoline and distillate futures. And though we saw that the API report came in with a slight increase, of course, but the OPEX and EIA projection did not help matter at all, giving the US oil some support, and this has led to increased demand. Now, will this sentiment continue today? Are there chances that price will continue to the upside, considering all of these factors we have talked about? And we should not also ignore the China slowing oil demand too as well. China's economy is not doing very well. We saw the manufacturing sector dropped significantly compared to their previous month, which is always a concern for oil buyers. And if anything goes wrong with the Chinese economy, we do know how this affects the demand in the global market, considering the fact that China is the highest importer of crude oil. Now, with all of this said, the path of least resistance for US oil is still looking very bullish at this point in time. Now, with this information, I had to scale down into a much more lower time frame to see what is going on here. As you will see, after this bullish move, this bullish engulfing move, we saw that through this later part of the New York session yesterday, we saw the market go through a consolidation phase. And this for us is a sign that there is an indecision as market participants appear to be looking forward to the consumer sentiment index coming up today before making any investment decisions. Now, if we scale down to the 50 minutes time frame, we begin to see the pattern the consolidation phase is taking. Now, look at what we have here. You can see, let me highlight this and let's look at it together. You will see that after this impulsive move, price action appeared to have evolved into an uptrend continuation pattern in the form of an ascending triangle. And whenever we identify this kind of uptrend continuation pattern, we do expect that there is a high chance that price action will break out of the resistance line to trigger another bullish traction. So in that regard, I already have a buy stop order sitting above the structure so we can capitalize on and maximize the potential of the uptrend move. And mind you, you want to be having your stop loss way below the previous low, which will be dovetailing to between 30 to 35 pips of stop loss, which I think is still considerable okay for this kind of entry at this point. So that is my expectations as regards buying from this particular area. However, if price action does break down this support line of that uptrend continuation pattern, we may likely see a short-term selling potential, pushing price back into that ascending trend line we talked about on the 1 hour time frame to incite an uptrend continuation. And if we look at the distance between this trend line and this ascending trend line, we are looking at about 60 pips approximately. So if you're a scalper day trader who is looking for short-term trading opportunities, this could be something you can look out for to capitalize on a bearish move, a counter trend opportunity, having your stop loss way above the $69.50 level. That's about 20 pips they're about to catch. So if that happens, this could bring some short-term selling opportunities. However, for me, I'm not keen on selling around this area, considering the fundamental factors behind the scenes and of course the technical structure we see here. So instead, I would rather want to see price come back into this trend line, this ascending trend line here, and if I see buy pressure or price evolving into a reversal setup like a double bottom structure, inverse head and shoulder pattern, then I will look out for the breakout of the neckline before joining that uptrend move. And with a buy stop order above the $69.50 level, we look out to maximize the potential of that bullish move. But if price breaks down this ascending trend line, the trend line which has been supporting the bullish momentum throughout the course of this week, and that will give me a signal to join a bearish move, and of course a breakdown retest on lower time frame will confirm a bearish move to the downside. So you can see we are at a crucial juncture at this point in time, where depending on how price reacts to this structure we have here will determine what our next line of action will be. So a quick recap here. We're looking out for more buying opportunities at the breakout of the $69.50 level. But if price drops break down this trend line, then this could incite short-term selling opportunities back into the trend line, where we look out for buying opportunities again. But if price breaks down this trend line, then that could incite some sell move ahead of the weekend. So this is my simple view on the USOILSPOT for today. I hope I made myself clear, but if you have any questions or you need some further clarifications, feel free to let me know in the comment section. So as always, I will take the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in, guys. All right. So in the absence of no questions, I want to take that as a confirmation that we are all on the same page. And I do hope you've marked out those levels accordingly on your chart, as we are going to be needing them to navigate the current market dynamics today. So with that said, let's move on to the next asset on our watch list. So the next asset we are going to be looking at this morning is the GBPUSD, that is the British pound against the US dollar. And in fact, it has been an interesting week for us. For me, I actually had a couple of losses. at the beginning of the week after the choppy market condition we saw as price action. For most of the first half of the week, we had a range bound structure where which emphasized the level of indecision in the market as price action was confined within the 1.31 and 1.30625. Remember, we saw buy position triggered at some point. It got stopped out in a loss. We thought we had a sell position at some point. It got stopped out as well before that Wednesday session when price broke down that support line had a 1.30625, and for me that did not do very well at all, except for those of us who are short-term traders who probably are looking for a small size of pips. We saw this move about 58-60 pips thereabout before this bullish momentum came in, and of course I do hope we moved our stop losses accordingly like we usually do here whenever price moves significantly in our favor. For me, that went into break even, and I can remember mentioning to us in my commentary on Wednesday, I think, yes, was it on Wednesday or on Tuesday, I said here that this descending trend line is going to be playing a significant role in guiding our trading decision for this week. And you know how we use our descending trend lines, of course. As long as price remains below the descending trend line, we want to be looking out for selling ideas. But at the point where the descending trend line is breached and broken to the upside, we want to be looking out for buying opportunities. And in preparation in anticipation of the Thursday's trading session, for those of you who are with me on both my TradingView and Telegram platform, I did updated us late in the night a simple setup on the 15 minutes time frame that will help us navigate this structure. Now let me quickly share with you what I showed us guys on my Telegram and TradingView platform. So we had this simple setup here, just exactly around that descending trend line we identified on the higher time frame, and of course we had a range bound structure. We saw the price confined within the 1.305 and 1.3025 area, and this was a reflection of that descending trend line here. And I did mention in that commentary, I think it was a short commentary I made there, that as long as price remains above the 1.3025 area, which I did identify as a temporary demand zone, we will continue to maintain a bullish bias, that we are not going to be selling unless that demand zone is broken to the downside, as you will see here, which obviously never happened. So as a result of this, we were able to capitalize on that bullish momentum. And of course, the US macroeconomic data, that is the consumer price index and the producer price index, helped us really well as we saw the British pound capitalize on this weaker US dollar to push price to the upside. And in that commentary, I updated us that we have another level at the 1.30550, which we can actually use to maximize the potential of this bullish move. And for those of you who had capitalize on both of these opportunity, you should be having a minimum of 2 buy positions at that point in time. But for me presently, all my buy positions have been closed, and for those of you who still have a buy position running at this point, you should be having about 80 pips for the first one, and hold on a second, for the second one, and about 90 pips for the first one. So I will just advise you right now, move your stop losses to that area around the 1.312. This appears to be a solid demand zone in the last 24 hours, in the last 12 hours. So I will suggest you move your stop losses right there, and let's see how the market will react to the structure. So once again, for those of you who capitalize on this opportunity, well done, and kudos to you for being faithful with our analytical approach. Now, as we prepare for the final trading day of the week, where it is expected that market participants will be rounding off their trading activity, and after the strong bullish move, we may likely see profit-taking activities as those investors or market participants who had capitalized on this bullish momentum may want to be taking some profits off the chart right now, and this could result into a retracement move to the downside. Now, to navigate this dynamic, let's take a moment to understand the sentiment in the market before we go into the structural details that will be guiding our trading decision. Now, first on the list is we all understand that the US dollar is very, very weak at this point in time, and it has continued to support gains in the GBPUSD in the last couple of days. Now, the heavily offered tone around the US dollar at the moment, driven by the dovish Fed expectation and a softer PPI and CPI report, has pushed the US dollar to a 1-week low and further supporting the sentiment in favor of the British pound. Then we've talked about the interest rate expectations. There's rising bets for a larger interest rate cut by the Federal Reserve, and of course this has further undermined the US Treasury bond yield, and we all know how the US Treasury bond yield is directly proportional in value to the US dollar. So if the US Treasury bond yield is not doing very well, it is expected that the US dollar too will drop significantly. So things are not looking rosy for the US dollar at this point in time. And of course, if we take into account the Bank of England's expectations as regards to interest rate cuts, despite a slowdown in the UK economy, markets still believe that the Bank of England will loosen policy less aggressively than the Fed, lending additional support to the British pound, as it is not likely the Bank of England will be cutting interest rates next week. So, as a result of this, the path of least resistance for the British pound is still looking to the upside. However, there could be some caution ahead of next week's interest rate decisions, as traders may hold off on any form of aggressive bet until next week Fed and Bank of England's decision happen, which could further provide a direction for this particular pair. So as a result of this, we may likely see some extended sideways trading activity ahead of this event. Now, with this all fundamental factors behind the scenes, I was able to identify a simple setup that will help us navigate the structure today. Now, first of all, we can see here that in the last 2 to 3 days, the market has been bullish, and this is further emphasized with the ascending trend line you see here. And of course, from a long-term perspective, you know how we treat our ascending trend lines. As long as price remains above the ascending trend line, we want to be looking out for patterns and structures that support the idea of buying. The only condition that will make me want to sell on a long-term perspective is for this trend lines to be breached and broken to the downside, which is yet to happen at this point in time, making it an uptrend situation at this point. However, we may likely see profit-taking activities today, which could bring price, maybe retrace price back into the trend line. It could come into this one, or that 1.310 critical area before that uptrend move happen. And if we look at the distance between where price action is right now and any of those trend lines, we are looking at a minimum of 25 pips to a maximum of about 30 to 40 pips thereabout, depending on how far that momentum goes. So this is an open opportunity for scalpers, day traders who are willing to take short-term trading opportunities. And so for me, I'm not that type of person. I would rather wait for price to come into the trend line, where I will monitor how the market will react to it before I either join an uptrend move depending on the structure that comes up, or sell at the breakdown retest of both of those confluence. Now let me show you how important this 1.31 area is. If we go to as far back as last week Monday, is it Monday? Okay, at the beginning of this week rather, you will see that this area had been a strong selling niche for a while before we finally saw price break out of the structure yesterday. Now theoretically, when price breaks out of a structure like this, we expect at some point in time price is likely going to come back, retest the structure in an attempt to continue the uptrend move. Now because of this, we may likely see a short-term selling opportunity, which could be as a result of profit-taking activities from that last impulsive move. So as a result of this, on the 15 minutes time frame, I have the simple setup here. Now we have a range bound structure, price confined within the 1.315 and the 1.31375 for about 6 hours. This happened during the Asian session, and now that we saw price break down the structure, this is welcoming short-term selling opportunities. So for those of us who are willing to join a counter trend move, this could be a good idea to join a move to the downside. Let's see how far it will go. Now mind you, one of the reasons why I'm not keen on joining this bearish move as a swing trader is simply because the sentiment is looking very bullish at this point, and we may likely see price not get to any of those trend lines before it continues the uptrend move. So as a result of this, I also have a buy stop order above the 1.315, which will help me capitalize on any form of breakout from that area. And of course, stop losses will be below the previous low, that is the range, the support line of the range bound structure. So we're looking at between 13 to about 18 pips thereabout to capture any form of volatility that will happen around that area. So for me, this is what I'm going to be looking at to guide my trading activity today, and I do hope it will also be of immense help for you to navigate the structure today. So I don't know if you have any questions whatsoever as regards to the setup, or you need some further clarifications. Feel free to let me know in the comment section. So I will be taking the next 5-10 seconds off. Let's see if there are any questions before we move on to the final asset on our watch list. And guys, do not forget to give the video a thumbs up. Your likes are very, very valuable to me, and of course it also helps this community to grow, as the YouTube algorithm, due to the likes, will push the video to a wider audience of traders who may find the content beneficial. So thank you very much, guys. And for those of you who are click on the like button, you guys are wonderful. I really do appreciate your support. So let's see if there are any questions before we move into the final asset on our watch list. Stay tuned in. Okay, so I see your comments, Anolua John. Hello, John. Good morning to you. Glad to have you around. Oh, you're very much welcome. God bless you too. Thank you. I'm very glad that you found the content useful. All right, so in the absence of no further questions, I want to assume that we are all on the same page. So in that regard, we shall be moving right into the final asset on our watch list for today. Stay tuned in. So the final asset on our watch list for today is my favorite amongst them all, and that is the XAUUSD, popularly known as the gold spot. And in fact, the gold spot is the most profitable asset on my watch list for this week, as we also price action hit an all-time record high at the 2,570 during the course of the week, as gold broke out of a multi-week range bound structure. For those of us who saw my analysis on Monday, where we talked about that massive range bound structure that lasted for about 2 to 3 months before we now finally saw price break out of that structure, amidst rising bets on a more aggressive rate cut by the Federal Reserve. And the data that came in late during the course of the week also helped the gold. We saw the lower US producer price index. We saw the consumer price index as well, the softer than expected consumer price index, pointing to easing inflation and, of course, boosting expectation of a possible 50 basis point Fed rate cuts. And this has went on to further benefit safe haven assets such as gold, silver, copper, and the like. And we also have geopolitical tensions like the ongoing Middle East tension, the Russian-Ukraine war escalation, which have also fueled high demand for safe haven assets like gold, and this further supports the positive outlook in favor of the gold commodity. However, at this juncture, trader might be a little bit cautious ahead of next week's interest rate decisions from the Fed, from the Bank of England, and of course from the Bank of Japan, adding an element of uncertainty to the current market conditions, which for me, I will say it is high time that we moved all stop losses and secure whatever position we are right now, as we may likely see price drop to the downside significantly as market participants round off their trading activities today. Now, for those of you who have been with me for a while, I've talked about this countless of times, where I did mention that when price action gets to an all-time high area, due to the fact that we are within uncharted territory, that is, price action has never been in this area before and it does not have any memory to work with, there is a high chance that fear could grip market participants and investors, and they may fear a possible crash. And due to this, we may see profit-taking activities happen due to this uncertainty, and this could lead into situation that reflects on the chart as choppy market conditions, consolidation phases, or even retracement move to the downside. So we are at a crucial and sensitive area where we need to be very careful of what to do around this area, which we are going to be deliberating on in a moment. But before we go into that, and for the sake of those who are joining for the first time, let's rewind what happened at the beginning of the week that led to the decisions we made so far. Now, scaling down into the 1 hour time frame, which you're seeing on your screen right now, remember at the beginning of the week we had a range bound structure. The week started on a bearish note, price started at around the 2,550, dropped into the 2,485, as you will see here, giving us a range bound structure. But funny enough, interestingly, of course, price was sitting above the key level we identified on the 4 hours time frame. Now, for those of you who missed my weekend video on the XAUUSD, I encourage you to watch this video so you can understand how we were able to arrive at the 2,485 as our key level. In fact, this area had played a significant role in determining the direction of price action in the past. And this area being our key level, price sits above the key level, which supports us looking out for bullish potentials. So as a result of this, we had a buy. I talked about this on Monday. I said we are going to be buying right away above the 2,485, and of course we had multiple entries to maximize this move. We had a level at the 2,550. As you will see here, we also added another one at the breakout of the 2,507. Now, during the midweek, I think on, was it on Tuesday or Wednesday, we had new setups to guide our decisions. I updated us on both my TradingView and Telegram platform, identifying a simple trading setup on the 15 minutes time frame. So let me quickly share with you what things were looking like on Tuesday stroke Wednesday session. So these are my entry points in red line. For those of you who are in the go-go challenge, you know this is the pattern we usually use to identify entry points. So that is not relevant here, so I had to delete it. So this was a structure we saw here on the 15 minutes time frame here, and the first thing that was clear was that the market was within a range. So we had the 2,521 as the resistance line and the 2,515 as the support line, and this gave us a demand zone, temporary demand zone. So for those who saw my commentary, remember we've identified this area as a temporary demand zone, and you know, as long as price remains above the zone, we want to be buying anywhere around that area. And unless the zone is broken down, breached, retested, then we can consider selling, which obviously never happened. In fact, if you had missed out on the temporary demand zone entry, that is this one here, we saw price break out of the 2,521 here on Thursday, as you will see, and since then, look at what has happened. Price went skyrocketing to the upside, and in fact we had about 330 pips move after this move. Remember, we were enjoying over 300 pips during Monday, Tuesday session, and Thursday we had a 300 pips move before I updated us. Remember, I updated us yesterday that we are going to be adding more at the breakout of the 2,458 and 2,554, and that was another 120 pips move as at this point in time. Now, for those of you who still have your buy position active and running, well, it is high time you want to be moving your stop losses and secure this position. As you will see, after testing that record high, we have noticed selling pressure resume, and I will suggest that anywhere within the 2,564 and the 2,561 is looking promising to place all stop losses to. Let's secure this current position at this point in time. And like I did said earlier, when price action finds a record high, due to the uncharted territory, we could see a situation where the emotion of fear could grip the market, as those who had bought will want to start taking some profit due to the fear that price could crash from this particular area. And this is one of the major reasons why I said we should move all stop losses accordingly. Now, with a well secured position at this juncture, what are our chances today? Well, in preparation for today, I have a new trading setup which will be guiding our trading decisions today. So let's first of all look at the 1 hour time frame. Now, on the 1 hour time frame, this is what I was able to come up with. It's a simple setup. First of all, we have the 2,530 level, a level which since the mid-month of August has been a strong selling niche in this market, as you will see here. Every attempt by buyers to break out of the structure has always been met with strong resistance from the sellers, as you will see here. So I'm just highlighting it for us so that we can have a visual understanding of what I'm talking about here. So we had selling pressure, and not until yesterday we finally saw a breakout of that structure after about 4 to 5 weeks of selling barrier around that area. Now, with price action breaking out of that structure, what are the chances that this momentum will continue? Well, if we look at things from a theoretical understanding, when price breaks out of a key structure like this, we expect at some point in time price is likely going to come back, retest the structure in an attempt to continue the uptrend move. Now, with this in mind, what are the chances that price could drop back into the structure? Well, look at what we have here. We have a trend line which interestingly shares a confluence with that particular structure. So we may likely see price drop into this area before another wave of uptrend move happen, or it can even in fact break down that area. But one thing we want to note here is the distance between where price action is right now and that area. And if we look at it, we are looking at over 350 pips. So it's something we also want to take into consideration if it ever happens. And let's zoom in to see what is going on here. So after this impulsive move, after the strong impulsive move, you see the strong impulsive move, it appears that the momentum has reduced significantly. Now, will this transition into an uptrend continuation pattern or a reversal setup that will incite a sell-off back into this area? For us to see this clearly, we will need to scale down to a much more lower time frame. Now, if we scale down into the 15 minutes time frame, we begin to see things clearly. And right here on the 15 minutes time frame, I'm able to identify a channel, an ascending channel. As you will see, connect the series of higher highs, we have the resistance line. And when you connect the series of lower higher lows, we have the support line here. Then besides that is a temporary demand zone, as you will see here, 2,561 and 2,556. Now, one thing here is as long as price remains above this temporary demand zone, we will continue to look out for buying opportunities. Now, as a result of this, I've told us all to move our stop losses. Let's secure this position and let's see how the market will play out around this area. Now, if price action, look at what we have here. We have the 2,568 level, which has been broken. So I would want to buy around this area right now, add more positions to my existing trade. So let me label this quickly. So we have the 2,568 right there. So reason why I've labeled this, look at what is happening here. We have a structure, buy pressure, then we saw the breakout of the structure. So I'm placing a buy right away, adding to my existing buy position, and let's see how far this momentum will go. Now, where will our TP target be here? Well, let's hope that price will break out the previous high. Let's bring out our Fibonacci extension tool. Where is it? Okay, let me look for it here. Fibonacci extension tool, pick it from this point to this point, then back down. So TP target could be between the 2574 and the 2578, which will be dovetailing to a minimum of 60 to a maximum of about 100 pips. So let's see how far this momentum is going to go. Of course, trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give us updates as at when due. Now, to consider selling the XAUUSD, what are the conditions here that will happen, that we will see on the chart that will make us feel comfortable selling the XAUUSD? Well, I would like to see price break down both the support line of this ascending channel and that temporary demand zone area. Now, not just only breaking it down, I want to see a retest of structure, giving me confirmations that buyers have lost momentum, and that will incite some selling ideas. So technically, below the 2,561 is looking promising to join a bearish move, which I doubt will happen today. But if it does happen, we want to be on standby to capitalize on that move. So this is my simple view on the XAUUSD for today. We have a simple structure, an ascending channel with a temporary demand zone in place. So let's see how the market is going to play out around this area ahead of today's US consumer sentiment index. So this is my simple view on the XAUUSD. I hope I made justice to this one. And if you have any questions or you need some further clarifications, feel free to let me know in the comment section. So I will take the next 5-10 seconds off again. Let's see if there are any before we start rounding off on today's Forex Morning Mastery. See you soon. All right, so in the absence of no questions, I want to assume that we are all on the same page. And it's on this note, we'll call it a day here. We've come to the end of today's Forex Morning Mastery. It has been a wonderful moment with you guys. I really appreciate your support, your presence, and I hope we didn't start too early. Or is it a time we will prefer that we start the Forex Morning Mastery on a daily basis? If it is, let me know. Your constructive feedbacks are highly welcome. So today we were able to take on all of the assets we've been monitoring since the beginning of the week. That is the USOILSPOT, the GBPUSD, and of course the XAUUSD. We were able to identify simple setups. I hope you mark them out on your chart, as we are definitely going to be needing them to navigate the structures. If you have done so, well done to you. So just exercise patience and let's wait for these structures to mature. And for those who are joining us for the first time, I hope you are able to gain a couple of things during the course of the session. And if you did, you want to be joining our next one, that is on Monday, 8:30 a.m. West African time, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here to start the week on a new note. And if you are yet to subscribe to the channel, it's at high time you do so at the moment, as we'll be sharing some videos during the course of the weekend detailing my plans for next week. You don't want to miss out on that one. And of course, we are going to be doing a Forex market prep on Sunday, where you will be privileged to give me any asset you want to be monitoring for the week, and we shall together break down the assets and bring out trading ideas from them in terms of swing trading. So I look forward to seeing you guys. And on this note, I want to wish us all the best of luck today and happy weekend to everyone. And trade smart, trade consciously, and do have a wonderful evening and a wonderful weekend. Bye.